Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to Tuesday, October 15th edition of Benzinga's Pre-Market Prep. I'm your co-host, a well-rested Joel Elconin, along with Dennis Dick. We got Chris Scalise working the boards here today. Earnings. That's what we're going to be talking about. Also, overall market talk with the S&Ps, finding some resistance here, just under 3,000. Don't look now, but Tesla's over 250. Beyond Meat and Smile Direct Club cannot catch a bid in this market. Just a quick reminder here, today's show is sponsored by Webull and their trading competition. Join traders from around the world in this paper trading competition. The competition consists of 4 weekly events, October 7th through 9th, with weekly prizes of nearly $11K worth of Amazon gift cards and a grand prize to the best overall portfolio of either a brand new Tesla Model 3 or 40 grand towards paying off your student loans. Plus, Webull will donate a portion of the total returns to the Shriners Hospital for children. If you don't have student loans, you can put the money in a Webull account. S&P futures are trading up 8.5 handles, 29.74. Caught a bid right off the open and matched Monday's high at 29.8250. So we got a good number on the upside, and we got a good number on the downside. Your closing price of 65.5. That's just a buck away from your pre-market low. Currently treading water at mid-session. Crude in the red by 35 cents at 53.24. Silver and gold both in the red. Gold losing 1,500, down 90 cents at 14.9670. Silver in the red by 8 cents at 17.63, and Bitcoin down $50. These are the futures at 83.05. So let's bring in Triple D. Triple D, how you doing on this too? Are you well rested? Are you fired up? Are you healthy? Are you ready to go?
Well, I'm trying to be healthy here. The arm is still hurting here. I don't know. It's been a month. Had a tetanus shot, and it's just hurt ever since. And I've been thinking it's a pinched nerve. I don't know if it's something to do with the tetanus shot or not, but I'm telling you, my arm's still hurting.
Is that why you weren't grooving as much on the dance floor?
Yeah, the shoulder has been bothering me for the better part of a month. Ever since I got 3 days after the tetanus shot, it started, and it just hasn't gone away. So anyways, it is what it is. Trying to work through it. Like I said, when I click my mouse, it hurts. It just hurts all the time. So anyways, hopefully we can figure this thing out. But, that's besides the point. We're here for the show. We're not here for my health. And I'll tell you, there's a few earnings here this morning. So we did kickstart earnings season here. We've got 2 banks going the opposite direction. We've also got some other major movers here too, even in the pod sector as well. Let's start with the big gun though. JP Morgan reporting good numbers. It ripped on the report. And what did we talk about? We talked about it ripping. And I don't know, I haven't really come in to analyze the tail of the taper this morning, but I did see it in the 119s. I said this went up to 120. We'd see if it would fail there. Did it test the 120?
Close, Dennis. It got to 119.20. It hit that number twice, and it actually someone's stocking 119 here. Just the last 4 15-minute brackets. The last one's a little bit lower, but someone's out there at 119. I'm just going to give you that as resistance. If you get above that, get into 119 handle, then come back under 119. Look out. JP Morgan, notorious for having some great whipsaws on earnings day.
Yeah.
All-time high 120.40, all-time closing high 120.23.
Can we just get the numbers there, or do you have them? Actually, I can grab them if you don't have them.
I got them.
Joel's fast.
Yeah,
give us numbers.
Maybe we'll get rid of Spencer altogether here.
Go.
They beat for EPS, 268 versus 245. Beat on revenues, 30.06 billion versus 28.49 billion. They make some money.
They do make some money. Let's do Citigroup too before we really start analyzing the tape on here, because Citigroup reported right at the top of the hour as we were starting the show. I'm going to give you the numbers here, Joel, because I'm fast too with this Benzinga Pro. $2.07 versus $1.95, 18.57 billion versus 18.55 billion. So could be on the bottom line, not as big of a beat on the top line. Maybe that's why Citigroup has started to leak. It was trading higher off the JP Morgan numbers, but really since Citigroup reported, it started to leak. Might as well do Goldman Sachs. We do all three of them in there. GS also, I'm going to give you the numbers for that. It's down $3, but if we give you the numbers for Goldman Sachs from the trusty Benzinga Pro, we have a miss. Goldman never misses. 479 versus 481. Man, they make money though. 8.32 billion versus 8.34 billion. So just a slight miss on the top, a slight miss on the bottom. And that's a slight miss here for shareholders this morning as the stock is trading down almost $4 here now. Give us a tail of the tape from the pre-market action for all of these issues.
Okay, so we'll start with Citigroup hanging out, just kind of riding the coattails of the other banks. And you had a seller, I'm just going to call it a 71 area, several highs in there. Pre-market high actually 71.24 on the last bracket, but you may have a hard time getting back to that area. Trading down at the lows of the pre-market session. Let's see if we can pick a bottom here. Currently trading at 69.44. Yesterday's low, 69.46. This is where it has to hold. The reason it has to hold there is because you got a $2 drop to Thursday's low at 67.55. So hanging out at yesterday's low for Citigroup, for Goldman Sachs.
Do we have these charts? Because I'm not seeing the charts. Is somebody working the charts?
Yep. We got Chris.
Okay, Chris. I wasn't seeing the charts, so maybe he's on it.
All right. No, thank you. Goldman also trading at the lows of the pre-market session. We've hit 201 on two different occasions. So there's your number. You got to hold. You're 82 cents above that. Yesterday's low, we've already taken that out. Got to hold 201 for Goldman here. You got a $3 drop, $3.50 drop to 197.54 to fill a gap from not a gap, but just a lot of room under yesterday's low. So these stocks were getting off the mat.
Yeah.
Low interest rate environment, and now I guess so earnings have them on the skids again.
Yeah, that's what we're seeing obviously this morning with all these movements in the banks. I mean, we're going to get Bank of America tomorrow. We're going to get more banks. Did we get Wells numbers?
Yes, we did.
I was neglecting Wells Fargo. Maybe it's because they've been the laggard of the group for so long that I even forget about them now. But it looks like a miss here on Wells too.
Yes.
I don't know if there's some adjustments in there, but I'm seeing 92 cents versus $1.14. Is that right?
I'm seeing $1.07 versus $1.14.
Oh, you got a better pro than I do then.
Yeah. Well, that's what I'm seeing in pro. I'll have to look for the adjustments.
Yeah, well, and maybe that is the adjust number. And the sales slightly beat. So it looks like it's still a miss on the bottom line and a beat on the top line. But Wells Fargo is coming off the lows. It actually went down to the 48 handle here. Yeah, 48.55, but it's coming off those lows. It's bid 49.14 here right now. So these banks trying to figure out which way they want to go.
Well, I'm looking at 48.16. That's your 3-day low, and just looking at all these charts and just the recent rally off the lows and stuff. And don't have time to do it now, but you could just figure the recent low, and then you got the pop up. This is like 47.50, so that's $1.50. 48.50. The retracement of those moves to see if you could prevent it from going back down to the lows of the moves. But it's just not the great environment for banks here. JP Morgan, what do you think about Jamie Dimon? You think he's still holding that stock? Remember the Jamie Dimon buy, Dennis?
No.
No. Yes, you do.
You're the one. The whale trade?
No, man, you're going back way far. Now, that's when I told you not to buy it at $28.95 or something.
$29. Don't buy it. You'll get it at $27. It's $118.
No.
Continuing.
The Jamie Dimon buy was in February of 2016. Remember, we had a rough January.
Oh, yeah.
And then we were casting.
Called the diamond bottom.
Yeah. And he came in and bought just a boatload of stock. Actually turned the market around. Actually turned everything around back in 16. So I'm not going to call top in the bull market until I find out that he had dumped that stock. But he bought. If you go Joel Elconin, Jamie Dimon buy Benzinga, you can pull it up on. I'm sure Google will pick it up. But best in breed there. Keeping an eye on the all-time high there. See if we can close over 120 for another breakout.
We pounded out a lot of earnings there, at least from the banks. Let's go to the pot sector here. We had Alan Brockstein on yesterday. He was worried about Afria earnings, but the market is not worried about them this morning. They look good. APHA getting a lot of yesterday's losses back here. Give us those numbers, Joel. APHA.
APHA. Now, I think what Alan said was the conference call had a different tune, I believe, than
from the last call.
Yeah,
he wasn't impressed. So he and I obviously I'm not following the story closely enough, but he was basically saying they had kind of said something, or they kind of put in earnings something that he didn't think that they should have. So he didn't like the numbers as much as the street liked the numbers, and that concerned him for this quarter. I don't know if they're doing the same thing here again, but the stock is really ripped up. I just be cautious because it ripped last time on a great report, eventually gave it all back. I don't know if it's going to do it here, but this sector is just in such shambles. Hard to get excited. I know it's up 16%, so great if you bought at those lows yesterday. But let's put it in perspective. We're getting back to where the stock was 3 days ago. So there's still a lot of overhead supply here.
I'm not sure this is looking at this report, I wouldn't be hitting buy button. EPS of 7 cents, down from year over year at 9 cents. Sales of 126 million Canadian. I guess that's up from last year of 13 point.
Is that right? That's what these numbers are doing stuff differently here. I don't know. So anyways, we don't know, but we had Alan yesterday that was saying on the show the way that they were doing the numbers, he didn't like the way they're doing the numbers. I don't know if they did it that way again. We don't know. We'd have to ask Alan to have him on the show. I don't follow the sector closely enough, but it looks like the revenue is way up year over year unless they threw something else in there again. So that's what I don't know, if there's a one-time, revenue in it. And obviously that's fine to do. It's just, the way it posts on the headline can be confusing sometimes. So I'm not sure if it's really 126 of continuing million of revenue or what it is, or maybe the 13 million was light last time, but it looks like a significant, increase year over year in revenue. Just not sure if there's one-time items in there.
Yeah, Roger Milley paying close attention yesterday. He said he thought he mentioned their accounting methods. That's just going from the YouTube.
And they should be the same as in the, similar to the U.S. We've got GAAP accounting principles here in Canada too. It's not like China. So you'd hope that the accounting measures are okay.
This 550 area, just on the dailies, just a bunch of highs in that area, some below, some above. Pre-market confirmation of that area as important as you hit 545 twice and you backed off the the lower $5, trying to stay in the $5 handle. So when I see that, when I see the daily highs coincide with the pre-market high, man, oh man, it better get up, it better get there, it better get over there, or this thing could easily roll over, get down to the top of yesterday's range. That's not far away at 475. And to close at 430.
I mean, on the last report, which was really good, it opened and it ripped $1 and it hung out there for a week or two before it started to leak. So, it's not that it necessarily just has to go straight down from here. Just saying, there's so many people who are down in this, they'll probably be using the opportunity to get their money back. Like, I think it gets near 550. I think I think that's a better level as opposed to 509. I'm not sure how high it got in the pre-market. How high did we get?
545.
He's got to be out there in the pre-market. It's already been to that level. So it gave you a shot here early, 545. I mean, this looks like a selling opportunity to me. I still think a lot of these pot stocks, competition, I don't know anything about their counting methods there, what Alan was saying, but I'm just saying, these stocks are in significant downtrends. The competition is coming. The story is not. In some cases, we've said the story has cooled off. In the pot stocks, I believe the story is broken. And the broken reason is because the competition is coming from the private sector, from everywhere, and they were trading with nosebleed valuations.
What about what about still the black market? I don't know, black market. Where are the prices between the black market and what?
I don't know that. We'd have to get Alan back on. I've heard before that it's still cheaper to buy it on the street than it is from the government, but I'm not a pot smoker, so I don't know. I'm not out there going to ordering pot, but I will say, a lot of these are medical marijuana plays. Like APHA is more of a medical marijuana play. They're not really selling the equivalent. They don't have a lot of the retail focus. Like Hexo, I believe, is more of a retail pot play where you've got, and it's really been slammed, where Afria is more of the medical marijuana play, at least to my understanding. But all we can tell you, we didn't do the technicals on this. I just say the whole entire sector has been hit so hard that I think you see bounces. Yeah, you can see a little bit of a short squeeze, maybe a life for a day or two, but I just don't see these things ripping back. I don't see Afria going back to $10, maybe ever. So just because the valuation just doesn't make any sense unless they continue to really grow and they can really ramp it up. And I just don't know how with that competition coming. So many licenses giving out here now. I mean, it's different market, like Alan was saying, in the US, but in Canada, it's going to start to get very competitive.
Just real quick, I'm going to rip through these. Tilray, trading at 21.45. You stuck up near 22. So we'll keep an eye on the pre-market high, but just be aware here, Tilray, your last two daily highs right here at 21.5. So we hold 21.5, maybe challenge that pre-market high. That's for Tilray, making a new low of the move, old-time low in Tilray, 2010. And wow, the August low was 21.5. So that's for Tilray. I'll go through CGC here, Canopy Growth. They had some other minor news here. Mm-hmm. That's getting a pop, up only 39 cents. Right here, once again, trading just at yesterday's high, 1940.
I mean, 3 days ago, this was $22. They've been hit so hard, and we've been dead right. We get things right, we get things wrong. We're going to pat ourselves on the back here again. We've been right on these pot stocks because maybe I was too early with it, but we really got bearish when the CGC really started breaking down through 40 on this show. So we've been talking bad about them for a long time. Not talking bad about the companies themselves, just talking bad about the stock charts that they've looked weak, and they've just continued to go down. So I'm not going to turn around and get bullish here because one company has reported an okay quarter. Hard. A lot of overhead supply.
Cron looking okay. That's trading up 27 cents at 8.13. You are trading above yesterday's high at 7.95, but challenging your 2-day high at 8.15. So you want to hold $8 and get a little rally here with APHA being your leader. If you're looking for a lot, your 3-day high there in Cron comes in at 8.58. But man, all these charts look the same. And Bev, once the darling of Wall Street.
Where's that? I was saying it'd go under $2 when it was $9. I think I'm
81.
I think I'm off. It's not quite down to the $2 again. This was a year, and I only gave myself a year, so I missed it because it was in September when it went up to 10, and I said a year from now it's going to be back down to 2. So I'm slightly off. I'm about a week and a half later. It's only got to 271.
$3. That's your level there. You had highs above and below. Boom, boom, 306. So if this gets above, can get above 3, hold 3. I don't know what the short interest in these stocks. I don't know what the borrow is on them either. But that's
another consideration.
Yeah, that's another. I did see a tweet for somebody. I can't remember who it was, but they said, all right, everyone's coming out with free stock trades. How about free stock loan? Who's going to be the first one to do that?
No, they make a lot of money from that.
I know.
Boring. It's a lot of hidden fees when you are shorting stocks. You have to be aware of those. It's not as simple as, we're just going to sell short Beyond Meat and collect it when it goes back down to $100. No, there's borrow fees. There's hard locates. I haven't been able to locate Beyond Meat forever, although I've never tried very hard because I know how expensive it is. But you look at this Beyond Meat, it's down every day. Here is a story. We talk about stories cooling off. We talk about broken stories. The story is now broken. That's not it doesn't have the buzz anymore. The valuation was nosebleed. Not Beyond Meat's fault at all. I mean, they obviously, did something right, and the story really got hot. And that story has completely cooled off. McDonald's topped it. They did the trial in Canada. That was the high that day when it got up to 160. We were saying 164 that day. That it was a selling opportunity. Here it is 2 weeks later. It is. I mean, it's not rocket science what we're talking about on the show. We're looking at stocks that are broken. They get a piece of good news and rallies it back up. A lot of times you look at it a couple of weeks later and it's giving it all back, if not sooner. So this Beyond Meat is getting, it was $200. Now, I've been saying for a long time, I think it's going under 100. I said I upped my target a week ago. I said 100 by the end of the year. I might get it.
All right. Daniel Manahan's asking, and I don't know about this. Why is Beyond Meat reporting earnings earlier than expected? Does that mean
did they move it up?
He's asking. I don't think that's necessarily
They're
good.
to report on Monday, October the 28th. I'm not sure when they were supposed to report before, but that's when they're going to report. So that's coming. That's interesting. That'll be in a couple weeks. We'll get beyond Meat's
They
report.
gotta blow it. I mean, that Mickey, that news, the Mickey D, and now
They may not need to blow it out. If the stock's in such a gutter before, maybe it will get us a relief pop. I mean, we're seeing that in Afria here this morning too. I mean, so from the bottom line, this bottom line wasn't great. I guess the top line revenues were pretty good, but you're just getting a relief pop. The thing's been sold so much, expectations were just so low. When stocks get hit that hard going into a report, the expectations are very low. Beyond Meat could have the same story, where it could just be, a situation where stock getting hit so hard into the report and eventually, it's just going to rally if they say anything good.
Johnson & Johnson had a Q3 adjusted EPS beat, 212, beats the estimate of $2. Revenue beat, slight revenue beat, 20.73 billion versus estimates of 20.09, raising fiscal year 2019 EPS guidance from the 873 to 883 to 884 to 889. The good news is it's trading up $1.78 at 132.50. The bad news is it traded up to 134.24. So the fade is on here. Oh, and Johnson & Johnson, I'm looking at this daily high. No, didn't quite get there. 134.70. Was that daily high? So
Yeah.
for me, when I see a pop like this, and then you start to give it back,
Yeah.
more times than not, I don't have empirical data on this. Man, it makes it hard. It makes it hard to get back up to that area. And I guess the whole opiate thing is still out there. I haven't been following the entire story, but seems like they've been navigating.
We had another lawsuit there too. When you were away on Friday, I forget, it was for something else again. So everybody's expecting, that it could be the opioid thing, and they ended up having a ridiculous award to them with something to the tune of $8 billion. Somebody had something, and they ended up getting breast enlargement, and the jury gave them $8 billion.
Yeah,
obviously that's not. What's that? Were you there for that?
No, but I heard him talking. Actually, my sports
just a ridiculous amount of money. Let's make the person one of the richest men in the world because he had larger breasts. I don't understand what the jury is doing there.
Griffin 11 saying we can hear you on YouTube, but not on the Benzinga website.
Just refresh the website. So the Benzinga website needs to be refreshed if you want to hear us there. We're live on YouTube as well, though. So just refresh. And obviously, if you're on the Benzinga website, you're not going to be able to hear us say that, but you need to refresh.
I want to give a shout out to our listeners on Spotify. Did you know we're on Spotify?
We're everywhere now, eh? Cool.
Yes.
Hi, Spotify.
Soundcloud, they don't
just for fun. Let's look at the Spotify stock. Oh, that's been in the gutter too.
Shh.
There's been a lot of stocks in the gutter. There's a lot of S&Ps are up near the highs, but man, there's a lot of stocks that have been in the gutter for a while. I guess if those stocks start to turn it around, Spotify needs to get up above 120. Somebody alert me when it gets above 120 because that's where I'll get interested. Until then, bears are in complete control. But somebody message me or tweet at me if it gets above 120 because I might be interested.
All right. Griffin 11 here, just moving away from earnings here for a second. Some morning movers, and there's one that you mentioned here, Dennis. There was a note out from Merrill Lynch on NVIDIA.
Yeah, big move.
Look at this.
This is a big note. So NVIDIA, there's no upgrade. It's just they reiterated their buy, but they bumped their price target up to $250. And they said that earnings per share could triple in the next 3 years. So huge, bullish commentary here from Merrill on NVIDIA on this. I still have it in the long-term portfolio, bought it at 150, plan on holding on to it. I just think, from the chips perspective, I still think it's one of the best, if not the best. And they got the gaming, so we got a lot of avenues where they could be obviously benefiting, and not only that, from AI as well, which I think was mentioned in the Merrill Lynch notes. So I'm sticking with the NVIDIA.
Yeah, you've been. Please sell it so when it goes back down to 150.
Well, I know I got it 150, and the thing went to 190. It didn't sell. Went all the way back down to 140, and then it's back down up to 190 again. So maybe I should sell it here because this is where it failed before. Rebuy it if it gets back down to 150. I just got to start trading that long-term portfolio more.
193.47 is what everyone's going to be looking at in this stock. That was your April high, and boom, boom, in May you touch 135.39. So, big round, let's call it 195, 200. How many people are saying when NVIDIA gets back to 200, I'm just going to cut my loss. So there's some resistance up here. But big note from Merrill Lynch, trading at the highs of the pre-market session. So that's good for them. Let's see here.
Hey, before we go on, I want to ask you, did you ever see the movie Life?
No.
Because I like it when you say boom, boom, and you give you a stock ticker. Because Life, it was Ray from the movie, which is Eddie Murphy in there. And he's talking about the boom, boom room. So I was wondering if you got that from his boom, boom. It's this boom, boom room. That's what it makes me think of all the time. So anybody who remembers that movie will know what I'm talking about. Otherwise, I'm just blowing it over everybody's head. But I always, you do that a lot. Talk about the boom, boom. Here's the quote. I was like, maybe you watch that movie, the boom, boom room. Anyways, he was in jail, and he said if he ever got out of jail, he was going to start this bar, and he was going to call it the Boom Boom Room. And there was a Boom Boom Room in Windsor after that, so obviously they stole it from that movie. But the Boom Boom Room.
What about a great concert song, Boom Boom Out Go the Lights?
Is that where you're getting it from?
Yeah. You know who sings that? If
No.
anybody knows that, they get a free 1-month trial to Benzinga Pro here. That's an old
Well,
song.
they'll Google it.
Don't Google it. Don't Google
No
it.
Googling. When we do these trivia, you can't go Googling.
Let's see. There's someone new here. Long screen name, JS2 TV. It looks like. I don't know how you came up with that one. Any thoughts on WWR receiving graphite contract? Well, I don't know anything about the graphite contract, but
I don't know anything about the stock.
350. I mean, I'm just looking at this. It's a reverse stock, a reverse split stock, which is not a good thing. But trading up 42 cents. You did spike to $4 on that, but let's see what happens at 350. All those highs at 350. Go to the daily. Yeah, in this one, all these highs at 350. So that's what I'm just looking at. Don't know anything about the actual news of the graph.
$40 2 years ago. It's $3 here now. Any type of rally you get in this will again be met with overhead supply. You can squeeze them for a little bit. It's had some spikes in there, so tradable, tradable bounces here. But I wouldn't be putting one of these in my long-term portfolio because I don't think it's anything more than a tradable bounce. Although we have seen some pretty good spikes in this before, so I wouldn't be surprised if there's room even at $4. But I'm not interested in this long term.
I just want to take a look. See, is the AMD getting a boost from the for the NVIDIA news at all?
AMD was very interesting last night, and I was trying to find a catalyst, and I guess there was none. But AMD was getting smacked after hours last night. If you look at the chart, it traded some volume, and it traded down to 30.30, and Intel was trading straight up last night. And they were going in opposite directions. I was like, is there chip news or something like that? And then somebody had tweeted out, and I thought that this might be the catalyst, that Intel was going to do some discounting to compete with AMD. And I was like, oh, well, that could be it. But now I looked this morning, and AMD's up. So I think somebody just got overexcited last night, wanted to sell, and they were spanking, like tens of thousands of shares were trading on AMD last night. Like probably almost traded, I bet you, close to 1 million shares down, and the market was trading up. So I was like, I don't know what's happening there. I'm not touching it because I don't really know. I was trying to search around for a headline. Maybe there was none. Somebody just wanted the hell out.
Yeah, good calls and bad calls, right, from everybody. TDD trade desk, is that moving at all today? No, not.
That's looking healthier though now. So that is consolidated. It looks like it's tried to put in a bottom. That's one that that's interesting. What do you think of that? I mean, get above 202, which we might do here today. There's some room for that to run a little bit. You will have an overhead supply issue. So I'm not getting real excited and saying this going back to 250 or 260. But there's room to 220 here. This could open up a bit.
You know who likes this one? He's made some good calls and bad calls. I know that Ryan Craver likes this stock. Yeah, he's our retail analyst.
I don't follow the fundamentals of it, like, to analyze from fundamental basis, just looking purely at the chart. And I traded sometimes there, TTD. Obviously, it was recent IPO. And there's some, well, it wasn't that recent, I guess. It's been a little while here now, 2016. But really, I had a crazy move at the beginning of 2019. Just got overdone. So, this is an example of a story that has cooled off. Not an example of a story that is broken. Like I was saying, the examples of pod stocks, story is broken. Stories that have cooled off can get hot again. Roku is a story that has cooled off. It started to get hot again. There's different, stocks you can talk about, obviously, that have, look like they're broken. I mean, oil stocks are broken, a lot of different sectors broken, but there's stories that have just cooled off. And I think TTD isn't a broken story. I think it's just one that's cooled off, and it could get hot again.
Yeah, that's so we got about a minute and a half here. Let's just finish up with these morning earnings. I'm going to go to UNH, University of New Hampshire, United Healthcare. Let's see how they did today. What do we got from them? A Q3 adjusted EPS beat, 388 versus 375. Beat on sales too, 60.4 billion versus estimates of 59.79. The good news is it's up 466.
Yeah.
The bad news is it traded up to 229.40. And what was your high from yesterday?
Kissed it almost 2 days ago.
Yeah, 220. Yeah, call 229. I just don't like the date on this one.
Yeah.
And if you're looking at to come into yesterday, not too far from the top of yesterday's range, if you're looking to pick this up, a little bit on the cheap. Yesterday's high 223.34. Overall, I mean, if you look at the monthly, you're like, that's just a healthy pullback. But looking on the daily,
it looks like it's got a lot of overhead supply again.
Yep.
The charts are tough when you start running into stocks that have been in downtrends for 2 or 3 months and they get a little pop. You have a lot of people saying, thank you for giving my money back. And you have willing sellers. And we've seen that already with UNH here this morning. If the stock goes red, I'd be very concerned. I'm not sure. This could just be a pullback. We get back up there and test 229 again. If this thing gave it all back at 220, I think it's going to like 210. So, that's if, it's an if scenario. I don't know if it's going to do that, but I would be actually, if it came back down to the 221 area, people think, oh, now I'm going to buy it. I think that's the worst thing you do. I think if you think it's, going to hold up, you're buying it here, saying it's going to go back to 230. But this is one that's already leaking, so I'm concerned about this stock.
All right. It is now 8:35. We're going to bring in Ryan Detrick. He's a senior market strategist at LPL Financial. Are you out there, Ryan? We're dialing up Ryan here.
We're getting them live. Chris is getting them in the background here.
He always gives us some good charts, some good historical information.
He's got the stats.
He's the stats man.
Yeah, oh yeah. He's got the data. He's got the data.
Yep.
Ryan's got the data.
And do you got that number there, Chris, that I put in the doc? The 980 number?
Okay. Wait, we're dialing somebody live. Oh, even the phone's ringing. Nice. We don't usually get to hear the phone ring. Hello. Paging Ryan Detrick.
This is Ryan.
Hey, Ryan, you are live on Benzinga's Pre-Market Prep Show. How you doing today?
I'm doing well, guys. Thank you. Glad to be back. Appreciate it.
Yeah, so here we are. We're getting started with the earnings season, but before that, we're just gonna cover some macro things here. And it's funny how the market changes, right? We're worried about the inverted yield curve. No one's talking about the inverted yield curve. Then we are talking with China. So trade update with U.S. and China. Where in your evaluation, where are we at?
Well, Joel, baby steps in the right direction, right? They finally have said we're in phase 1. Now, there could be phase 2 and phase 3. But, there's a lot of pain. The recent economic data out of China still is showing slowing. U.S. by no means. Or there's rip roaring here in our economic data as well. So, they meaning China bought $1.5 billion worth of our soybeans last month. And it looks like they're going to keep buying more. So that, we are baby stepping in the right direction. Trade is such a key to this whole thing because it brings back confidence. It brings back CapEx. Companies invest in themselves. This is over a 10-year economic cycle of growth, the longest in our country's history. If we want this economic cycle to continue, we need confidence to come back. And Washington gets that. So does China. We really need, we don't need maybe a resolution, but a path to resolution. And don't forget, next month in Chile, President Xi and President Trump are going to meet and potentially, face-to-face at least, to potentially sign this phase 1. And if they do, markets could like that, and we get into that normal bullish seasonal fourth quarter stuff. We can talk about that soon, but that's kind of how we see things playing out, baby stepping in the right direction.
All right, so your comment here on Q3 earnings season, It's a pretty definitive statement here from Ryan. Q3 won't be good, but we are looking for EPS to improve in the next year. So is it going to be one of those earnings seasons where, oh, the Q3 numbers aren't great, but we got good guidance? Let's focus on the guidance.
Yeah, that's usually how things work, is it not? I mean, you look at this whole year, we're looking at maybe 3 or 4% earnings growth this year. Last year, we gained over 20% earnings growth on the S&P 500, but yet stocks were down 6% last year. We're up close to 20% this year. So it's kind of interesting. We do believe long-term earnings matter, but it's kind of unique how this economy is so much slower this year. And we know why. It's because of the Fed pivot and the realization after the worst a year ago, the worst fourth quarter, in 10 years, the realization we didn't have a recession. So we really just bounced back. But overall, you look at earnings, we're going to be slightly negative probably in the third quarter, but things really, potentially right now, people looking for 10% earnings growth next year. We think that maybe a little on the high end, but if we get some good news of China, and let's not forget next year is an election year, as we all know. There's a lot of reasons for President Trump to potentially get this trade going the right way by the second quarter next year. And that could potentially let us hit high single digits, maybe double-digit earnings growth next year. And that's why the S&P is 2% an all-time high as we speak. It's looking forward to the likelihood that this is just an economic slowdown like we saw in 15, 16, back in 2011 as well. This is not the impending recession that gee whiz we've been hearing about for so long. We just think it's a slowdown and the economy can expand into next year.
All right. So besides the trade talks, besides interest rates, inverted yield curve, and earnings, impeachment talk. And you're saying not all impeachments have been the same. To me, I mean, he's got a year left in office. I mean, I'm looking at a low probability of that happening. But anyways, you've done some incredible homework here. Looking at the S&P 500 index returns after the initial impeachment process began with Nixon. Wasn't Andrew Johnson impeached too? Do you have the statistics on that?
Well, Andrew Johnson was impeached. I believe it was in 1869, so we don't even have any reliable data, I guess. That was a long time ago.
Anyways, what's your research show you?
Yeah, I mean, if you look at Nixon, his trouble really started in late '73 in October with I believe they called it the Saturday Night Massacre, but he wasn't officially impeached. The initial impeachment process till February of '74. That was before my time, but I know a lot of people listening might remember the recession of '73, '74, the vicious time. The oil was spiking, stocks nearly cut in half. So clearly the impeachment, that was part of it, but I don't think that's why stock did so poorly that time during the impeachment. Is compare it to the late 90s when President Clinton was impeached. What happened, stocks were soaring. Now we had a big sell-off in, I guess August, September of '98. Right before the impeachment started with President Clinton, long-term capital management went under, the Russian ruble crisis. So we had a big pullback going into that, and the timing of it was kind of random, I guess we could say, with the impeachment starting with President Clinton. Nonetheless, a year after the impeachment process started with President Clinton, the S&P was up 39%. 6 months later, up 41%, over 41%. So to say the impeachment is going to truly impact stocks, we think it comes back to that Fargo quote. If the economy's stupid, if the economy is strong, we think we're still going the right way here. That can make up for a lot of sins and potentially it's a lot of news. Media like to talk about it. We don't see, President Trump no president out of 45 of them has ever been removed from office. We don't see that happening. So, just keep looking at the fundamentals and they still are tracking the right way in our view.
Yeah. And I think also with, different, geopolitical. You were coming near the end of the Vietnam War with the Nixon administration, and with Clinton. I mean, you did have the decline, then the rebound. So, good statistics there, Ryan. Thank you very much. We won't go to sports yet, but what do you what do you have for Q3? We're going to be okay. But fourth quarter has tended to be really strong for stocks. You're going back to 1950 with this information. So you're looking for the Santa Claus rally or a little bit before that?
Yeah, we think a little before. I mean, we're in the scary month of October, right? But if you go back to 1987, we all remember the 87 crash, stocks down over 20%. For the month, the S&P was down about 20%. This is a pre-election year. Every single pre-election year since then, since 87, the S&P was down only once In 1995, like 0.5%. So for whatever reason, pre-election years, October seems to do really well, at least since the 87 crash. And that's kind of what's happening this year. But just fourth quarter, right? The fourth quarter is a 3.9% average, the strongest quarter out of all four of them. We get it. But it's interesting. When you start the fourth quarter up at least 15% for the year, like we're this year, so a good start to a year, those returns jump to a median return of 4.6%. What I'm getting at, the fourth quarter is usually good. It's actually stronger when you have a good start to it. So that, history doesn't always repeat, but it does rhyme, said Mark Twain. I assume he said it. He gets all those quotes. But, we think that could be the case again, that all the negativity, look at all the negativity. The AAI poll, the lowest number of polls we've seen in 3 years. The Bank of America Merrill Lynch survey just came out this morning. It's got a lot of bearishness as well. So a lot of negativity. Any good news, look what happened Friday, any good news at all, we can spike and we see potentially new highs here, sometime in the fourth quarter. Absolutely. Not too far away. We think it's going to happen.
So you're not concerned about the 10-year low in manufacturing or the 3-year low in services?
No, well, we look at those, and like you said, that shook us up 2 weeks ago. But at the same time, manufacturing 3-year lows, and service 3-year low, manufacturing 10-year low. Look at the consumer. Consumer spending continues to come in strong. Consumer confidence, the University of Michigan consumer sentiment poll last week showed a tick higher. The consumer does make up 70% of GDP, and the consumer seems to really be ignoring, I guess we'll say, a lot of the scary headlines. And as long as the U.S. consumer is still strong, it's very, very hard to see us heading to a recession. So again, slowing, yes, but maybe expanding next year as the consumer leads us is still kind of how we see things playing out in 2020.
And what about the Ohio State University consumer sentiment poll?
That's from a contrarian point of view, it's about as high as it gets, right? My, oh my, I guess last time we talked, the season was just starting, but as a Buckeye fan, this is the big thing with us is our defense was very, very poor last year, historically poor, and this year they've got 3 guys that might go in the first round draft, and they're playing like it. So when your defense gives up 10 points a game, it makes life a lot easier. That's the one thing.
Are you on the road at Wisconsin or home?
That's at home. That's on the 26th. They just announced it a noon game. A lot of people were kind of upset about the noon game, but it's the big, whatever Fox called it, big noon or something. But they play Wisconsin at home, Penn State at home, and then the big one, of course, in the big house on the road. But and then Michigan State was at home. So the schedule gods kind of were in their favor this year too with some of those big games at home.
I want you guys to, my dad's theory was that we want you guys to win every game. We want you to be ranked number 1, just like 1969. You remember the 1969 game? You guys were ranked number 1 being compared to the Minnesota Vikings of the National Football League. You came into the big house. So that's what we'll see if that can happen this year. Any final thoughts on the market here? I mean, you're giving us the expectation for earnings. I mean, basically, we are, if you look at the overall, you look at the longer term chart, we're in a trading range. And we've been in a trading range for a couple years now here. Now kind of hang out. To me, when you're in a trading range and you hang out at one end too long here, it would be the upper end of it. To me, there's, more expectations to take out the top of the trading range. Any comments just, on the overall market and what, like getting over 3,000 and staying over 3,000? Is it going to be earnings? Is it going to be a trade deal? What's going to be the driver?
Well, I think that's a great point. Let's put perspective. The S&P had a record 15-month winning streak ending in January 2018. 15 straight months the S&P was higher on a total return basis. You could argue S&P's virtually gone nowhere since then, up a little bit, I know, with the 20% correction in the fourth quarter to refresh the fears, and that's a good thing. So this is a really nice consolidation in our view. You look at the yield curve. Everyone was worried about the yield curve when it was inverted. Now the yield curve is starting to steepen, and the other lingo as well. When the yield curve starts to steepen after it's been inverted, that's when we had recessions right around the corner. But if you look under the surface, it's actually I don't want to get too geeky here, but it's actually a bear steepening yield curve, which is more of a normal thing. That means long-term rates are increasing faster than short-term rates. That's, hate to say it's different this time, the 4 most dangerous words in investments, but it is. The yield curve is potentially saying, hey, things are getting more back to normal here. global LEI numbers last week from the OECD. It's a mouthful to say that, but they ticked higher over 6 months. So the global economy is starting to show some signs of maybe coming higher here. And what the yield curve is telling us, we think, is things are coming back to normal. And look at financials. The earnings are coming out this morning. It's a very influential group, obviously. The higher yield curve, higher rates will help that group. And we think that group's kind of a key group here. And they'll kind of tell us, but we like the financial group to lead us here in the fourth quarter.
We've been on the line with Ryan Detrick. He's a senior market strategist at LPL Financial. Great Twitter follower on Twitter, or whatever you want to call it, at Ryan Detrick. Ryan, thank you. We'll talk to you again next month.
Appreciate it. Thanks, Joel. Bye-bye.
All right. S&P's just kind of hanging in here. 8 1/4, 29.73, 75. Up 8 1/4. I guess no one is trading. They're listening to Benzinga's Pre-Market Prep show. Triple D, what do you see out there?
You just mixed, right? You got some banks going up, some banks going down. JP Morgan's up $2, Goldman's down $4, Citi's down 50 cents, Wells Fargo's trading down 62 cents. So you mixed in the banks, you mixed within sectors. And then you look, and obviously we've had some stocks, report here after we talked about it early, which is getting a nice lift, although it's leaked off the highs. UNH is getting a nice lift. And then you can look at other stocks like OMC, which are trading. Well, OMC was in the red, but it started to come back here a little bit too. So, and then there's a lot of ratings here today too, just different calls here. So a lot of individual stock news really driving us. But what I would like to talk about for the next few minutes is this stock moves from yesterday. Because we are seeing, we saw a big move here in Tesla here once again. Tesla's been straight up for 1, 2, 3. I guess we had one kind of red day in there, although the bar still made a higher high. But we've made higher highs here on Tesla for 1, 2, 3, 4, 5, 6, 7, almost 8 days. So it has been moving up. And now you start getting up to where we were back in July when the stock was $266. What are your thoughts on Tesla? I mean, so many bears out there. I mean, they started a ticker symbol for a Tesla Q because so many people think this is going bankrupt. It's been an expensive short for a lot of people because the stock is just not going bankrupt anytime soon.
Well, you finally filled a gap. If you're a gap trader here and you like to, see, voids in price fulfilled, you had a gap from 234.50 up to 258.16. And what was I bet you got there yesterday. Yep. Yesterday's high, 258.55. Sold off a little bit. I guess the big number would be 266.07. Let's call it a range because on that day you had to close at 264.88, 266.07. I like the price action you can't argue with. What I don't like is the reason the stock went up is because Elon Musk says Tesla pickup looks like an armored personnel carrier for the future.
I saw those pics of the pickup, and that's obviously, I don't know, have we actually seen it out? Because Jason said that's just rumored still pics that we're seeing online here right now, that we haven't been released the actual pics. Because I was talking to Raz about it there. But I mean, it looked awesome. The pics that I saw, can we find them online? Anybody got a pic? Will you show it? Tesla pickup. But I think these are just, still speculations on what it's going to be. I don't think we've actually seen an actual photo of it.
There was a rumor at the wedding that Raz had his car come from the parking lot and pick him up at the front door.
I think it's here, though. I think they do. Yeah, well, they're saying car toys are cool. I'm looking at it here on Inside EVs, and they've got a picture. I wonder if this is an actual. The piece of the Tesla puzzle are falling into place. So let's have a look at what's known. So I don't know if they've just done their own concept drawings of it. There's some different concepts of what it might look like, but I'm not sure if it's actually been released. But I tell you, it's probably going to look cool. I want to buy one.
What are they going to make? 5 of them? No, I mean, how long is it going to take to?
Yeah, that's been the argument, though. But that's a bogus argument. This company's selling some cars. I mean, it doesn't sell 5 cars or 10 cars. I mean, how many cars? Where's the production levels here now? It's like 7,000 a week, isn't it?
7,000 a week.
That's significant.
Do that in my garage with my neighbors.
Yeah, sure you can, Joel. But okay, where's Tesla production numbers here now? I mean, this has been the argument. Oh yeah, they're making 100 cars. They're making them in a tent. Well, you know what? This argument hasn't held water for the bears for a long time because the stock is not going down, guys. Maybe it's other reasons. Maybe it's a cult stock. Or maybe the stock company actually, can produce cars at a cheaper price than everybody else, and the profit margins are going to be higher eventually. Maybe that debt load they'll eventually be able to service. There's some bullish arguments here.
I mean, you're doing good. Cumulative production has moved up from Q4 of 2018, 556,000. Q3 of 19, 816,000.
It's a million cars almost.
It's not a million car. Okay.
816,000. I mean, they're making some cars. These cars are coming out. You know what? The margins are going to be better on these things. They have a huge amount of debt to service. The cars look awesome. When I drove in that performance, I've never felt power, especially out of an electric vehicle, out of that thing. I mean, it's almost as fast as the Corvette. So, and it's electric. It's pretty impressive what this guy's done. So, just throw the stock aside. You got to be impressed with what Elon Musk has accomplished. I mean, think about who has accomplished really more. I mean, he's got the SpaceX going, which is incredible. He's got the car company going. Yeah, maybe he says the wrong thing here and there, but this guy is making, some changes to the world. He's done some impressive things, like landing those rockets, those boosters, and saving them after, they're falling from the air, and landing them on a 10 by 10 foot pad that's floating in the ocean. I mean, I'm impressed. So I am impressed with Elon Musk. I'm impressed with his Tesla cars, and I don't think it's a zero. I know the debt. The reason I'm not in it, I have written puts in the past, and I plan on doing it again if it pulls back because it was good. I do not think it's a zero. I think, this, I don't know if it's going to 500. I don't know if it's going to 1,000, but I tell you, if the stock came down to $100, there's going to be a lineup of buyers down there, and he might eventually be pressured to sell it to them. So that's why I'm comfortable writing puts in the $100, $110, $120 area. It's run a little bit. I've booked the profits. I'm hoping for a pullback here so I can rewrite those puts.
All right, let's just touch here the last 5 minutes of the show. We do have some ratings to cover here, and KeyBank upgrades Bed Bath & Beyond overweight, announces an $18 price target here. So it had the news.
Yeah.
What was it? Activist news, or that was
the activist news was way before, and that didn't help it. That was way back in the beginning of 2019 when the stock went from like $13 up to $19. It had I believe it was the earnings report, Joel.
Was it earnings?
I think it was earnings from 4 days ago when it gapped up. I believe it was the earnings report. Go to the pro.
Yep, you're right.
Yeah, so the earnings report was okay. I mean, there's a valuation here that some people are saying is attractive. I just challenge, the size of the stores and that they sell towels. So obviously they sell some other things too.
The Warlock. Hey, is that that's Kenny Glick? Kenny Glick. Yeah. Get the bid. Yeah.
It's got life right now. I'm not shorting it, but at the same time, I'm not putting it in my long-term investment portfolio either because I think it's still got a lot of issues.
Let's look at trading up 44 cents here. Good number for you here, folks. If you're following this issue, the follow through move took the issue up to 13.15 with a settlement of 12.98. This was on Friday. So if this is, man, it's a big move for this thing overnight. But hey, get over 12.98. Test that 13.15. Close over $13, and I think you got another leg up in this thing. If you fail it, it's an upgrade. I don't know how active analysts are on this stock.
Not that active, so that's why it gets a lot of love. And another point that Kenny's making in the chat is a short squeeze. I mean, there's a lot of shorts in here. So that's why you'll see this thing. I can see it. It's probably going to challenge that 13. I wouldn't be surprised to challenge that 13, 14 high. See what it does. If it gets thicker around 13, does it fail? Big day for it. Can take out the 13, 14 and start squeezing them more? Maybe. I mean, the squeeze is still on here. So there's a lot of shorts that are nervous on this. So it could squeeze them for a bit. But I'm not going to say, it's safe to go and invest in Bed Bath & Beyond. Kramer was saying that the other day on Mad Money. I disagree with him. I think it's safe to trade it. I like it from the long side as a trade, maybe. Stopping myself out, I would stop at 1171. Below 1171, I want no part of this because if that thing takes out the low of the earnings day, then I think it's going to fill that gap. So as long as it stays above 1171, the bulls have a case here. So I don't have no problem with you coming in and buying it as a trade. I have a problem if you're sticking this in your long-term investment portfolio thinking, I'm going to 5.3% yield. What can go wrong? A lot of things can go wrong. Go look at the charts of Pier 1 imports, etc. Sometimes these stories that get hot for a little bit are still broken stories. I believe Bed Bath & Beyond is still a broken story, but it's squeezing them a little bit here right now. So as a trade, just don't get married to the position. takes out that 1171 low, I'd get the hell out.
2 upgrades in a row. Telsey Advisory Group upgraded this on the 10th. KeyBank follows it up. Also, Evercore and Wedbush were bullish on the issue, upgrading it back in August and September. So you do have an upgrade train here in triple BY. It would make me bullish is they'd say, hey, our next store we build, we're going to make it, 2,000 square feet less. And also, their leases, are coming up, and, maybe they could do some downsize or get rid of some of the underperforming stores or get rid of all those 20% coupons here.
I mean, that's just it. They got a coupon to get the sales. So, that's why the long-term story I still don't like, but agree with Kenny. I think he's agreeing with me too. As a trade, you can squeeze them a bit.
All right, let's all just check in at the remainder of ratings here. Dennis, anything that's jumping out with you?
Square catches a buy, just initiation at a buy at UBS. You also had SFIX, Stitch Fix getting outperform rating from Baird. That's trading up a couple of percent in the pre-market because of that. Shopify had on my list to talk about, no rating, but it had a real good day yesterday. And Shopify, don't look now, but it's on the comeback trail. We've been saying, and we were saying before, this is a story that's not broken. This is a story that cooled off. And the story is going to start to pick it up again. Again, if you're Canadian, this is one of the Canadian darlings here. If you're a Canadian investment manager, you're looking at some Canadian tech to your exposure. There's not a lot of places to go. That's why I do believe Shopify, you're not looking at the valuations or anything, but I've said before, I think Shopify could be a $500 stock. I still think that. I wish I would have bought some. I thought about buying some of the pullback. I just can't stomach the valuation because I'm that whole value guy, which hasn't even worked that well from a long-term portfolio. Maybe I should just be starting to buy these Momo stocks, but I like Shopify on a pullback. SHOP.
I got a nice number, 348. 348 represents the 50% retracement of your move from 409.61. That was your all-time high made in August down to your low in September, 286.07. Cool 123-point sell-off.
What happened with Roku?
What happened with Roku?
Something going on right now. It's blasting off.
All
Roku
got
blasting off.
Roku
Something
over
happened.
there? Let's see if we can find what's going on here. Up to 88. Reppin'.
Somebody said something on Roku.
What? Let's see here. Somebody said something on Roku. I'm looking.
That just ripped $3, like right now.
Apple TV. Coming from the desk here from Sebastian. He says something about Apple
Something
TV.
just happened right now. We're trying to grab it.
I think it's an Apple.
Hard on the fly sometimes. The Apple TV app and Apple TV coming to Roku platform.
Ooh.
Apple.
Thank you, Sebastian. Okay.
Yeah, that was breaking. That was a press release right at 9 o'clock. So Apple TV app and the Apple TV Plus is coming to the Roku platform. That's why you just saw Roku rip it up.
What we'll keep an eye on here is 124.02. That was your high on Friday. It's a little bit over $2 away. If you want a secondary number besides that high, the close on that day was 121.60. But right now, short-term target here, Roku, 124.02. It's always nice to stay on at like 9, right? Because then you get the
wow, this is ripping, Joe. 123.04 just traded.
Yep, I see. Yeah, we'll keep an eye on 124.02. That was your high in Friday's session. So let me preview tomorrow's show. We got a new guest coming on from earningsreport.com. His name's Tom Bowley. He's going to come on, and good time to have him on, right? With our earnings season around the corner. He has an accounting background, so we'll see how he incorporates it into his trading, and also more earnings after the close and in the morning, and we'll be covering that for you as well. Thank you for joining us here on this Tuesday, October 15th edition of Benzinga's Pre-Market Prep.